Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Thursday, July 18th, 2013. We had a kind of lackadaisical day where we gapped up a bit on the day and really didn't wind up doing too much at all. We were higher across all three averages, but really didn't move the needle as far as price or internally goes. The internals were just barely okay, but really didn't leave us anything really much to build on. So just kind of a pause day, perhaps, and we'll have to see what they want to do for the options unraveling, which will have to happen tomorrow since they really didn't do it today. So let's move on and take a look at the major futures charts. Let's start with the ES futures. All right, so here's a look at the ES futures. You can see that we really did very little on the day. We were up on the day. Most of that came from the gap up. Small, narrow range candle, essentially inside the previous days. Definitely was not. You can see from the volume here, was not really an expiration type candle. So hopefully we'll get a little better price action tomorrow and get a bias that will develop after the first 60 minutes that we can jump onto and work with. The levels to watch overhead, obviously the last few days high, and then 6/8 level is 1687.50. To the downside, this little gap window is going to be key, 1661, and then the 10 EMA that's coincident with the 5/8 level at 1656 and a quarter is going to be your next level or area of interest. Moving on to the NQ futures, essentially the same day but a little bit more positive. We can see that they did push up a little bit higher intraday here. The futures really were more relatively strong on a relative basis as far as intraday goes. You can also see from the volume here, the volume is really pretty unimpressive here. 8/8 level is going to be key overhead, 31.25. That's still a pretty good ways away for sure. To the downside, first support is going to be this 7/8 level, 3047, call it, and then the gap window is going to be the next real level that comes into play, which right now is also coincident. You can see with that rising 10 EMA. So 3026, 3027 is going to be very important if we do take a turn to the downside here. The SOX versus the NDX, this key ratio didn't really put on any strength today. We had a fairly strong day 24 hours ago, but today we just kind of roll back to the downside here. So we're still down below this high water mark, but above the recent breakout. So right now we're still neutral with unfortunately a downward bias here. Okay, so looking at the S&P versus the NDX today, very similar performance on both sides. So really didn't do much on either side here. We did push up a little bit higher in the NDX. That's the white line here. You can see the relative performance spread here, which is definitely in favor of the NDX. But we want to see the semiconductors, which is really key to the overall NDX, start to pick up here and add on. Here's a look at the 10-day trend. We did drop down a little bit more today, not too much. We're still above the reversal threshold at 0.85, but we're definitely moving towards that direction. This certainly has a downward bias. So definitely be on guard for that. If we do record that 0.85 level or lower, we're going to be on guard for the reversal to the downside. But unless we have a super decisive downside game trade to the downside tomorrow, we're probably not going to get that. All right, we haven't looked at this in a while. Here's the Dow Gold ratio. This is kind of one of the classic risk on and risk off metrics. You can see that we did punch up here and make this higher high, but we're actually threatening to make a lower low here, which would qualify as an expanding pattern here. Let me draw this out for you. That would definitely be unwelcome to the bulls. Put this trend line on it, and if we start expanding here in this fashion, trading out in this megaphone, if you will, that would be very negative. These expanding patterns are often reversal patterns, especially when they come at range high. So we've got to be on guard for that. Right now, we're still trading essentially laterally. Let me just move this. So if we just continue to go laterally, that's going to be fine. But if we start to expand or break down below that, that's definitely going to be negative. Either way it happens. So definitely be on guard for that. That would be just one of the classic risk on, risk off ratios, showing that people are taking risk off in the market rather than continuing to put it on. All right, so here's a look at the individual sectors. We'll rank them from best to worst. Airlines were the best on the day. Internets were strong. Housing sector was fairly strong. BKX was above average as far as the performance goes. It definitely outperformed the broad market. Laggards, gold and silver, that was yesterday's top gun. Computer hardware dragged. Utilities were weak, and the telecoms were weak as well. So definitely have some kind of rotational movement going on right now. So the market's not really doing anything kind of organically. We're just kind of rotating from one asset class to another, which is also kind of indicative of where we are in the market. As far as the countdowns go, obviously the transports are kind of nowhere here. The one to watch is going to be the housing sector. We still have that 13 exhaustion in place. See if we can build on that. The utility index is 10 bars down on the seeker countdown, so we're getting close there. Definitely want to keep an eye on that one. All right, so let's start with the top gun. The top gun was the airline index. Airline index is approaching the prior high here. This is a new high close on the move, possibly pushing up to the 6/8 level. We're only 7 bars up now, as of the current day's close. So we can push up a couple more candles before we run into any overhead from the setup countdown phase of the seeker. BKX still kind of struggling here with this 13 in place. It's got to get above this plus 2/8 level to really get interesting to the upside again for sure. The OSX index still pretty much range bound here and being drawn to this 8/8 level at 265.5. If it breaks out, keep in mind that we'll be into the overbought area, so they're going to pull pretty hard. So at plus 1/8 at 269.5, and then plus 2/8 at 273.5. To the downside, near-term support remains at the 10 EMA, which is close at hand, and then at 261.72, which is that 7/8 level on the Murray Math box. The BTK issues were basically inside the previous day, so nothing new there. But keep in mind that we're kind of winding up here, so when we do break out of this little congestion box, we should be able to have a fairly decent move. Then to the upside, 2250 is going to be the first resistance, and if we break out to the downside, we're going to have support, minor support here at 2125, a little better support at the 10 EMA at 2105. When we take a look at the semiconductors, they kind of drag their feet. We're 7 days up now, so we're getting a little bit deep into the count here. This is going to be a 9, 13, and then a 9 when we print the last two candles, if we remain uninterrupted here, so that's going to be very important. The 913.9s are usually pretty powerful and will hold back price. The 913.9, where you have the 1 through 9 setup phase, those are the green numbers. Then the 1 through 13 countdown phase, the red numbers. Then when you get another 1 through 9, that 1 through 9 after the 13 has a lot of pull to it, much more so than just the 1 through 9 that doesn't have a 13 up preceding it. So keep that in mind when we go forward. Finally, I want to take a look at the XAU, have a little something to build on. Didn't follow through, but we are still above the 10 EMA, so wouldn't rule that out. Could have been a little bit of a lack of bidding from the options guys, kind of eyeing up this area in here where we spent most of the options cycle. So could go either way tomorrow, depending on what the options guys need to do. I want to take a look now at the oil futures. We're really just winding up here in this trading pattern, so keep an eye on this. This is definitely important. There's a lot of room before we get to that 112.50, which is the real resistance at 8/8 to the downside. The low of this congestion area is going to be key support coming just above 104. And finally, let's take a look at gold. Mini gold futures looking pretty much like the XAU, which is no surprise. Starting to form this little rising wedge here. It's really starting to lose its momentum. Haven't really been able to build on this, so if we lose this 10 EMA, we do have a gap to fill down here at 1250. So keep that in mind as we go forward tomorrow. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.